Year 2018 was a very exciting year for all Indian exchanges for more reasons than just one. Of course, 2018 also became the year when market regulator SEBI allowed Indian equity exchanges to trade into commodity derivatives, and that very decision also opened up various consolidation opportunities when it comes to the existing commodity exchanges. Now, with many more important issues, be it extension of trading hours in equity derivatives or deepening the corporate bond market or enhancing the framework for startup listing, 2019 promises to keep the excitement going. Hello and welcome, I am Yash Jain and we are here at the 10th ANME International Convention to speak to the managements of some of the most prominent exchanges in the country about all those issues and much more. Thank you so much for speaking to CNBC TV 18 at this conference. Of course, the most important decision of 2018, if I had to see in retrospect for equity exchanges, would be allowing them to start commodity trading. Of course, gold and silver were the initial commodities with which the exchanges started. It's been 3 months since then. Help me understand what has been the initial response when you are doing something against an existing player. For both gold and silver, what is the kind of response which BSE has seen, and where does BSE stand in the ranking of all 3 exchanges when it comes to MCX, NSE as well as BSE?
See, basically when you start a new segment, you need to worry about the demand, how many people are interested and so on and so forth. And clearly we have the largest reach in India. So we have almost 4.1 crore investors registered with us. The largest, larger than almost double the nearest exchange. And so that brings us into a huge reach which other exchanges, especially specifically commodity exchanges, currently do not have. I mean, I've been told probably 10,000 people a month trade in commodities exchange currently, whereas we are talking about 4.1 crore, right? So
absolutely,
we are going to increase the reach, and that was what our initial hypothesis was. Fortunately for BSE, in commodities now we are on day we are almost 20-25% of the gold market in India, given the 3 exchanges. Yeah. And we are doing exceedingly well beyond our expectations. Yesterday also we did almost 600 crores in gold. And that's almost 20% of the market. Some days we have even 30% of the market, and that's where open interests are growing up. And in this market, there is no sort of liquidity enhancement scheme. There is no sort of such incentives being given. So it's whatever trades are coming are happening despite city payments and other things. And similarly, silver we are doing exceedingly well. In terms of the 3 exchanges, we are the second because we started like 15 years after the MCX. But we are far ahead of other exchanges in the game.
Of course, as you are saying, there is everything which is present, starting from demand to the response which you're getting in the initial months. If I had to ask you this question, as far as the last 3 months are concerned for commodity trading, what kind of contribution would that have provided to your total revenue, exchange revenue? And in the year 2019, what kind of growth do you see as far as participation as well as volume in commodity trading is concerned?
See, basically, the way we look at, when we conceptualize the market, we don't look at revenues. We look at more about the regulatory aspect of it, about the services, about ensuring that the users, the customers, the importers, exporters, wholesalers, they are together and they are able to come and use it. The revenues are like far behind because in the initial stage of a market, you need to invest a lot of efforts, not necessarily too much money, but a lot of efforts have to go in from every aspect of the sort of business community, and including the exchange. That's where we see. But if you look at the contribution which the brokers that trading is making to the Indian exchequer, it's pretty large now. I mean, if you are doing 600 crore of transactions a day, you are pretty much giving 60,000 rupees on CTD to government of India every day. And so if you ask me, contribution to India is very high and it's increasing every day. But the contribution to BSE is currently 0 because we have announced that for 1 year we will not be charging any
tax,
sort of any transaction charges at the exchange level. Ultimately, the profits are getting squeezed for all the intermediaries, and the only profit they can make is by squeezing their cost. And if you stay on BSE, then your costs come down. If you stay on other exchanges, your costs are higher. So profits finally are not there. While if you come on BSE with the same amount of volumes, you will make much larger amount of profits.
As far as the next set of commodities which are concerned, which you would be looking to start, do you have any sort of volume target which you would want to achieve before you file for the next set of commodities? And if yes, what would that volume target or internal target be for that? And what could be the next 2 commodities or the next 3 commodities that you would look to start with as far as commodity trading is concerned?
So we have started gold and silver to begin with, but then we have gone into oil, which is Oman crude, which is what India usually imports. And so there is a huge connect into the sort of real usage in India, which is not true with other contracts where you settle on American prices, which usually don't matter much in Indian
context.
Similarly, we also launched copper. We also have plans to do other base metals. And we also have tie-ups with most agri-commodity associations across India. So we have plans to do cotton, guar gum, guar seed, soya cakes, palmolive, even ethanol. We think when we come in, we'll also bring in the spot markets, because SEBI is very clear now that all contracts in a very short time, be on BSE or any other exchange, have to become deliverable. They can't be cash settled, which currently they are.
True. There are very limited players as far as commodity trading is concerned. What kind of consolidation opportunity does it open up whenever you start into non-agri and get more into non-agri, agri and non-agri commodity also? What kind of consolidation opportunity does that provide for an exchange like BSE?
We have been thinking very hard on this inorganic part of it. But we think because ultimately what does competition get you? They get you the customers. We are the superset of customers in India. They get you technology. We have the best technology in the world. And other exchanges in India have actually very old technologies. So effectively, if you don't get distribution, products are being approved by SEBI. Almost every product is the same. And so you don't get product differentiation. You are the larger distribution. You are the better technology. Human resources, BSE today is pretty much the best in terms of the people that BSE has. We think we are very well placed to do everything organically. And one of the reasons why we changed our technology and we wanted to go into commodities was to do it organically. And so that's where we are currently on. But if there is any opportunity, we may see, but we are not looking at actively at all.
In your sense, what has led to this slowdown in the IPO market? B, how do you see 2019 as a year for IPOs?
See, basically, if you look back, the IPOs come in usually in boom times, because the valuation expectations of the promoters are met, the other investors are met, and usually the incoming investors also have some hopes and all. 2018 particularly has been very bad for the world market. Indian market still did positive, but US market was in negative. Rest of the world was in pretty much uncertain territory. And that's where I think the 2018 in a sense didn't do so well. And that explains the IPO markets not doing so well. Largely 2018 was a sort of, it did not give the returns which were commensurate with people's expectations.
2019 would, in your sense?
Looks like, because the world is now again poised for a large jump up in a way, because the largest issues in world markets were two. One was interest rates going up in US. And the US-China trade war. Both these fears seem to be receding. So if the world market starts doing well, India anyway is growing so rapidly compared to the rest of the world.
In 2018, we also saw exchanges bringing up this topic, taking it up with market regulator SEBI of extending the trading hours, right? Of course, SEBI did give an in-principle approval in that sense, but because of certain concerns from the brokers community, that proposal could not go through. Help me understand, A, what were these concerns essentially? B, in 2019, have you restarted talks with the broker community, and how are you trying to address these concerns raised?
See, basically, sometimes the traditions are the concerns. And sometimes if people can see that we can show our sort of way of protesting. It might be, the demands may be not that relevant,
Right.
but people want to assert their power. There are worries which are more personal, nothing to do with servicing investors and all, and nothing to do with cost benefit, because if there is an argument that the cost will increase if you extend longer hours, but then commodities are now part of the equities market. Most brokers are sort of offering commodities, and they are already running the market for 12 in the night, from morning 9 a.m. So effectively their cost is already now done.
Right.
You are not allowing them to do benefits.
Have you restarted talks, and are you hopeful that the extended trading hours will come through in 2019?
So basically this group, not the same group, but different groups have made arguments against and opposed screen-based trading. They've opposed depositories, they've opposed margining, clearing corporations, they've opposed derivatives. So every reform in Indian market has been opposed by some or other group. And when it is done, everyone starts thinking why it was not done earlier. And so for me, it is logical, it is in the interest of Indian investors that if Indian investors, if technology allows you to run 24 hours, why Indian investors should be deprived? But foreign investors who invest in India can trade in Singapore 24 hours, no problem. In US, they can trade on Indian indexes 24 hours, no problem. But only Indian investors have to be deprived, and how long?
Those were, of course, some of the expert views coming in when it comes to how equity exchanges expect to grow themselves in this newly introduced segment of commodity derivatives, as well as talking about the resistance and the way forward when it comes to extension of trading hours in equity derivative segment. But on the other side of this very, very short break, we will also speak to some of the commodity exchanges to understand how these exchanges are really coping up with the increasing competition in the wake of the recently introduced reforms.